After the July FOMC meeting, expectations for a rate cut in September have grown stronger. Federal Reserve Chair Jerome Powell's remarks revealed a cautious assessment of the economic situation, and the decline in the ISM manufacturing PMI has heightened market concerns about a recession. This article will delve into the FOMC meeting content, the impact of PMI data, future economic forecasts, and the likelihood of a rate cut. At the July FOMC meeting, the Federal Reserve decided to keep the federal funds rate target range at 5.25% to 5.5%, which was in line with market expectations. However, more notable was Chair Powell's hint at a rate cut.
On September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent, so it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
He indicated that with a cooling labor market and declining inflation, a rate cut in September could be an option. With good data, the Fed's confidence in inflation continuing to fall towards the 2% target has grown. The labor market has returned to pre-pandemic levels, strong but not overheated. These factors collectively form the basis for the rate cut discussion. According to the CME's FedWatch tool, the market anticipates a 100% probability that the Federal Reserve will cut rates by at least 25 basis points at the September meeting, with a 22% probability of a 50 basis point cut. The market expects that the Fed may cut rates by 25 basis points at each of the remaining meetings in November and December, with a roughly two-thirds probability that the target rate range will be 4.50% to 4.75% by the end of the year, and a one-third probability that it will be 4.25% to 4.50%, compared to the current 5.25% to 5.5%. This optimistic expectation for rate cuts is also driving Treasury yields lower. The 10-year Treasury yield has officially fallen below the 4% mark, hitting a new 6-month low, indicating investors' strong sentiment towards rate cuts. The ISM manufacturing PMI, a key measure of U.S. manufacturing activity, fell to 46.8 in July, below the expected 49 and the June figure of 48.5, marking the largest contraction in 8 months and indicating significant manufacturing shrinkage. Initial jobless claims for the week ending July 27 reached 249,000, higher than the expected 236,000, sparking concerns about the economic outlook. A deeper analysis of the economic data reveals that while the inflation rate has significantly dropped from a peak of 7% to 2.5%, indicating reduced inflationary pressure, it remains slightly above the Fed's long-term target of 2%. Powell also warned that the Fed will make decisions on a meeting-by-meeting basis, as premature or excessive easing of policy restrictions could reverse the progress made on inflation. Conversely, too late or too little easing could overly weaken economic activity and employment. The Fed is at a crossroads, and the pressure is undoubtedly significant. The market's expectation for a rate cut in September has already formed, but Powell's remarks also indicate that the Fed will rely on data to make the final decision. If inflation and labor market data show that the economy needs more support, the likelihood of a 50 basis point rate cut in September will greatly increase. It will be essential to closely monitor future economic data and the Fed's policy moves to make informed decisions. The Fed's policy choices will have far-reaching impacts on global markets, and the upcoming Jackson Hole meeting in August and the September FOMC meeting will undoubtedly be the focus of the market.